Good day, all. Ira Epstein of Linn Associates with your metals market update. And this is for Monday, and this is the 1st of April. I'm not kidding. It is April Fool's Day, but it is 2019. The time right now, about 2:05 in the afternoon. So in the metal markets, another down day. The stock market, again, that suction area that is pulling everything out of the markets as people are just saying, I want to own stocks. They're not saying that today about the bonds and notes. Real rates have moved back up. A lot of refinancing probably go on as mortgage rates took a big whack to the downside. Ideal time. Get into the spring when people want to buy homes. They've got less amount of market homes on the market, but they're probably not getting into the bidding wars that they were before. So that gets to be interesting. So on the metals, what do you do here? Because you've got a market with a stable dollar that's near the current highs, and they're sort of just drifting downward. So let's take a look at weekly chart of gold closes. And you're going to finish out today around the 1294 area. I already looked before we did the show on the June contract. When you come to the weekly charts, you're still pushing down. Remember, you still have an April gold contract that is going, and on a weekly chart, it looks at the lead month. So you're back under the 18-month moving average of closes, which puts the market in a down thrust at this point. We had that anyways, but even the bias is down right now. If you come to the June gold, you can see how the market had this steep up move, and you don't even need me. You can almost see where it had a line going up, and then when it broke it, you've stepped out of a trend. And now the market's just bouncing around down here. The pattern is one of, temporarily at least, a higher high and a lower low. This is an inside trading day today, which means the market is not taking out the highs or lows of Friday. The importance of it? It's a stall. That's all that I see it. Should the market take out today's lows, you could end up with lower highs, lower lows. You'll say you could. What does he mean by that? Well, if you take that out, what would happen if you didn't take out 1291.30? Don't take that out. And today's low was 1292.20, so that's very probable. You could do that and then move up. Well, you could end up with higher lows. What if instead of that you just jump higher tomorrow? You'd still have this pattern. So the key is going to be taking out today's lows and the 1291.30 for us to get a semblance of what's going on. Where do you think support is in the market? Well, if you can't see it, I don't know what more to do. It's the 100-week average is one of those numbers, and the lower Bollinger Band. Now you see that one. They're coming together in the 1287.80 to 1290.60 zone. Is that a buy number? That's not what I said. I said support. So I am looking for those that are bearish in this whole zone. They might be looking and saying, okay, we're close to a support zone. Maybe we don't want to press the market anymore. Why do I say that? I already know you're in oversold territory. I put the charts together, and bingo. So you're in oversold territory, not trending. The bias is down. Momentum is oversold, very close to supports. That's the way I'll describe it. When we come over here to GLD, it should come up in a second here as it calls everything from the server. It's in a bearish trend now. Lower highs. Today's low, 121.59, is under 121.71. Lower low. So the trend is down. That trend gets broken if you take out Friday's high. And let me see if I can get this to come this way for you. It probably will. There we go. It had to get it called in. 122.75 is the high of Friday. So if that's taken out, that will negate the downtrend, and you hit a downside target at 121.17. So this chart's also telling me you're getting very close to support zones. As we come into GDX, this market peaked out against the upper Bollinger Band. This, and I'm going to come back here because it just called it up. There we go. Now I'll be able to work with it. This was the action on Friday. If you take out 122.32, and Friday's action would have been higher lows, higher highs. If you took out 22.32, because of the way you're set up, that is going to be for some a sell signal. And that's what happened today. Why? That would set up this pattern. Lower highs, lower lows. They'll risk probably back over this high here, and they're gunning in if they can get down as low as the Bollinger Band. I'd be concerned with some of the trade there because you're already oversold territory. So I think the lion's share was made on the close. In the gold-silver ratio, the market peaked out again at 86.5 and you're in a correction. What happens when this number gets smaller? It means silver's getting a bit stronger than gold. That's all it means. And the silver had gotten down last week to the Bollinger Band. Unlike the gold, unlike GDX, unlike GLD, hit that, and now the market's getting a bounce. The trend is down, oversold, you've hit downside targets. I don't know how aggressive bears want to be on a rally to the combination of the 118-day average in an oversold condition. Generally, I find they're not overly aggressive. In the copper market, here's what you looked like on Friday. Momentum's up, trend is up. What's the first upside target? The upper Bollinger Band. What do I often say here? I say that the first challenge of an upper Bollinger Band, be it to the upside, well, the upper band's going to be to the upside, obviously, or the downside. The first challenge is where I think pros take some money, if not all the money, off the table that are futures traders. Well, you got up to 295.65, and you're finishing the day out at 292.75. For those of you that don't know, that's $1,000 in the futures markets. So that's what I teach, that I think the pros were doing. Now, that doesn't mean I told you to go long here. We're talking about what the market will do on the first challenges. I do not, in these videos, tell you to buy or sell. Where I do that is my morning subscriber videos. And the reason is government. Government doesn't want me to say, I want you to buy here, the market's going there. What if I'm wrong? I don't want to do that here. I do it the way the government says. This is purely about the technical indicators we have and the rules applying to them, and I try to keep you on a path there and then get you into my morning subscriber video, because that's where I can do the other things the proper way. In the July, and proper meaning government rules, the July platinum market, I see a neutral market. Yes, the trend is down, lower highs, lower lows. That is countered because the market is over the 18-day average of closes. So the bias is up and momentum's pretty flat here. Now close back under the 18-day average and the trend and the bias will come together back to the downside, but they're not there right now. And in the palladium market, let's take a look. What are the odds of staying under Bollinger Bands? 5% of the time. So here's a market making a first run, and that's where I think pros, I won't change my opinion. By the way, this was the setup. For those of you that were looking at my other video, if you take out this low, you then have lower highs, lower lows. First challenge of the Bollinger Band was where I think pros were taking some of their money, if not all of it, off the table. You now make a secondary run break. Now you're under the Bollinger Band for this move and knocking on the door of the 100-day average. You bounce up on Friday. Now, do you think you're going to stay under the Bollinger Band again? Market closed 1341.80. That's under the 1353.75. And if you come to this day, you had closed here at 1421.50 under that Bollinger Band. You had 3 days in a row under it. 2% chance is the way I teach that, then up to 5 percentage points, because you have consecutive days under the Bollinger Band of staying under it. That doesn't mean I've turned bullish. It means that I think that the pros understand there might be another spot for them to get in. And that's what I think's going on. And it's a heck of a run. It's $48. That's a lot of money in the futures markets. In the dollar index, I have been pretty consistent in saying these 2 days threw off the whole chart as far as I'm concerned. I don't know what to do with them. Never did. When you get an outside day down, then you take out the high of that, and you get swing lines that form in the middle of it. I just leave it alone. I'll walk away from the market, and as I say, let it reset itself. If I have to give the nod, I'd say higher lows, higher high, but I don't know what to do with it. How's that? That's an honest answer. I don't see anything that I'd know how to do with that dollar index. We're going to have this coming Thursday, April 4th at 12:30 p.m. Central Daylight Time, another webinar. Now, I know a lot of you want to make it, then you'll go, oh, you know, my password, I put it in, it wasn't right. Give yourself all the time in the world right now and get registered for it. It's free registration. It occurs at 12:30 p.m. All we do is cover charts. You can bring in any symbols you want. It could be an ETF, it can be a stock, it could be a futures. I'm not about fundamentals, I'm about charts. So we're going to talk that. You might have an idea on my theories. You want to ask questions on it. I'll review them for you there and try to answer everything. But it's a lot of fun because it's two-way. We're able to communicate with each other and get that done. You can either call my staff if you haven't received your invite. They were sent out this morning about 11 o'clock. If you didn't receive it, it means you're not on my mailing list. Get on the list, call my staff. Another thing you could do, I asked my IT people, put up a link right here so if you click it, the registration form will appear. Sign up and you'll get everything you need sent to you right after you register. It'll have your the password you need to get in, the date, the link to the webinar. I'm Ira Epstein. You have a good day. See you tomorrow.